The US stock market is going to open in around 12 minutes, and I'm going to be sharing with you guys my live trading session using a simple scalping strategy. Now, the first thing I like to do is I like to identify the current market structure. This is the 2000 tick chart for the S&P 500 futures, and the current structure, there's really not much price action, really not much, but we have to work with what we got. So the main thing I'm looking at is we have this bullish move working high, we have an exhaustion phase, big spike down, and prices are now making lower lows and lower highs. So this looks like a potential spike and a channel pattern. This is the first leg, this is the spike. Prices consolidated and then went into this channel. We're making lower highs, lower lows. Prices are working below EMA. So this starting to look like a downtrend, not a strong one, but the small downtrend looks like it's developing. So right now I'm only interested in reasons to go short, but you know, still not that many bars, so we still need to wait for prices to develop. Alright guys, so stock market opened a few minutes ago, and I want to talk about this setup right here because this is off to two key entry points, but I didn't take this trade. Now, why I didn't take this trade? Because I am focusing on high probability setups. High probability setups are second entries at key entry points. This right here is just the first entry. We have a new low right here, first entry short. Even though it's off the trendline and off the EMA, the downtrend is just starting to develop. Downtrend just got confirmed. If this was one of those strong downtrends that market keeps making new lows and keeps making new lows, I would be buying almost any pullback. But when the downtrend is just developing, I really want to wait for those second entries. So even though you have two key entry points running congruently, because it's just the first entry and around the market open, I was hesitant to take this because around market open, there's going to be a lot of fake outs. Alright guys, so we may have a potential second entry short here. And the second entry short just got triggered. I'm putting my limit order in place. And the second entry trigger right below this bar, because this is the new low right here. Prices are working high. First entry short failed. First entry short failed because this is not high probability setup. Market likes to move in twos, two-legged pullbacks, a high probability setup that smart traders take. And second entry trigger one tick below this bar. This happened so quickly, we may actually get left behind here because this happened very quickly because this was a big bullish bar and it looked like we may close above the EMA. But at the very end of the bar, we sold off and this bar started to form and sold off quickly. So I tried to put my limit order as quickly as I can, but it looks like I don't want to chase it at the same time because we're close to these lows. But I am waiting for prices to make a new low. This is just the first break of this downtrend right here. So I'm waiting for prices to make a new low of this downtrend. That's the rules of trendline. After trendline will break, prices will attempt to make a new extreme. So I'm looking for a new extreme with the second entry short at the key entry point with the high probability setup. So the structure and the pattern working together. Let's see if we can get filled. We still didn't reach the profit, so but it looks like we may get left behind here. Oh, we got left behind. Oh yeah, so that happens. That counts to the territory, but hopefully you guys can see the pattern. We are waiting for a new low. We're below EMA and second entry short, high probability. So I'm resuming the chart and the setup unfortunately worked nicely. We would still be holding a runner. What I'm looking at is prices bottomed out here. We have a nice double bottom. I'm going to draw my support line. And let me make it perfect. Like this is the perfect support line. We have a break, first leg to new low, pull back, second leg to new low, and one more push to new low. Prices made a double bottom right here. And after trend line will break and there will be a new extreme, then correction will take place or possibly straight up reversal. So right now I'm no longer interested in selling because I already see a new low right here, break and new low, especially with the double bottom. So it looks like prices are now going sideways and potentially reversing. Prices may head up all the way up to highs of the day. So, but I'm no longer interested in selling because the downtrend played out, at least for now. We may turn into some sort of bigger pattern eventually, but right now I'm just looking probably to go long, if anything. All right, guys, so we may have a potential setup. Let me put my limit order in place. We actually have an inside bar right here. So I don't need to wait for prices to trigger one tick higher above this bar. I can just wait for prices to trigger one, and we got trigger. Hopefully we can get filled, and we got filled perfect. So you guys can see I have automated strategy in place, which automatically put my target profit first portion 3 contracts. This is the main portion as 8 tick scalp. I'm putting my target profit, I'm putting my sell stop 1 tick below signal bar. This way I'm keeping my stop loss safe. I don't want to risk no more. If I'm wrong and prices go in the opposite direction, I don't want to continue pulling my sell stop lower and lower. No, I have to accept the fact that I'm wrong, and I'm just going to deal with this and not give too much to the market. So I'm putting my stop loss 1 tick below this bar, and I'm leaving my 1 contract as a runner as a bonus just in case anything happens. Now, why am I taking this trade? We have on the left side structure looking bearish. We have a break, new low, just like I mentioned many times. From that point on, prices continued in this sideways direction, in this trading range. You guys can see double bottom right here, fell, break lower. And this was the key information that led me to taking this trade. We have a fail break lower because most breakouts of trading ranges will fail, and 3 big bullish bars. This right here told me that there are a lot of people willing to buy this market at this level right here. Had we not pushed above the EMA like this strongly, I would not be interested in taking this long right here. Also, fell break lower, and the way we pushed higher and we pulled back, this right here is a second chance. Market is giving us a second chance because all the people who didn't go long here and they were late, market is giving them a second chance to enter right here. I'm going to take the second chance. And it's a nice bullish bar, and there's a quadruple confirmation of this support. So this is a more of a context trade than a pattern trade. This right here was more of a pattern. This right here is strictly context. The downtrend played out according to price action rules. Support is being established, quadruple bottom, fell break lower, strong bullish indication that there are buyers in the market, and prices are now going sideways. You guys can see that prices fell break below this level multiple times. Look how many times prices tried to push below, and every single time people were willing to buy. So I'm going to buy with them. Even though we're going long into EMA, it would be better if we get failed second entry short above the EMA, but I don't have that luxury now. I have to take what I see. I have to trade the market I get, and I'm getting a second chance to enter on this failed breakout, higher low, and the support is holding nicely, and sellers are weakening, and buyers are jumping in the market. So this is what I'm doing, and I hope I may catch a low of the day. A lot of times you will catch a low of the day if you're a little bit more aggressive. So we may get all the way up to here. All right, prices are halfway through our target, and hopefully we need 2 more ticks. So hopefully we can get those 2 more ticks. But it's been a slow day overall. Nothing really much happening. It is almost 5 o'clock, and this is the price action. We have market open around here. So hour and a half of really not much happening. And we're bouncing off our exit order, but unfortunately we need to tick through the limit order. This is why I'm using the automated strategy. So I'm also early in the queue, so I don't have to tick through my order. But in this case, it looks like we had to tick through because the market is so liquid that there's so many people trading. So I'm going to tighten my stop loss to break even because I don't want to give anything back. This runner is just a bonus, but I'm expecting the runner to go up here. So I'm going to be trailing my stop loss probably as we go, and I'm going to tightening the runner. And then, by the way, guys, it is 17:22, and our runner is unfortunately about to get stopped out. We pushed higher. This is probably another fell break of these trading ranges. You have fell break right here, fell breakout right here, and fell breakout right here. This is how you trade the trading ranges. We pushed higher and pulled back below EMA, and we are working to hit our stop loss, unfortunately. So no runner once again. It's very hard to catch a runner when market is this low, so that's not surprising. But I'm really not keeping my hopes too high because we should have rated up higher. Obviously there are people still willing to sell, but it was good enough for sell. I wasn't really expecting, I wasn't looking for major trend reversal. I was just looking for a scalp because this is a scalping strategy. Having a nice runner is a good bonus. All right, and our runner just got stopped out. So unfortunately no runner for us now, but that's all right. That comes with the territory, and I'm gonna put my trading range like this. But hopefully you guys can see how the structure is reacting. We have a failed breakout, multiple bottoms right here, holding prices nicely. This downtrend played out, and prices are now consolidating. And guys, we may have another setup right here. Let me put my limit order in place. Depends if we break above this doji looking bar. We traded up lower, and at the very end of the bar, we trade up higher, which is what I want to see. But I'm treating this as a failed breakout. I'm treating this exactly as what happened right here. This is how you trade trading ranges. You fade the breakouts. You fade the breakout right here, and you fade the breakout right here. And once again, if we trigger higher, I'm fading the breakout right here. And this would be, whoop. I'm gonna put my limit order, and I got filled. Tighten. Once again, I'm going to tighten my stop loss one tick below the signal bar. In case I'm wrong, this is an aggressive setup. I don't want to argue with the market. I want to accept my loser, and I want to keep my risk to reward ratio great. I'm going for 8 ticks. And this right here is the new high. So you're working over your first entry long, pull back, pull back, pull back, second entry long. So this is a second entry long. This is a failed break lower. We're coming off very near to this support. This is a failed break below the support. And the bar is doji, but the upper body is the doji. So the tail is on the downside. So the bar is bullish, and we're working up higher. We can pick up some steam here. We may get a nice rally. I'm expecting to get rally like this, strong move up of this failed breakout, because right now we're in a trading range. So I was trading the downtrend rules right here with this trade right here. Let me mark this trade right here, second entry short. Then we went into this trading range, so I was switching my gears, adapting to trading range rules, and I'm doing this again here. We have a bullish bar, and we're working higher. We're halfway up. Hopefully we can get a quick scalp here. There's a little bit of selling off, but I'm not really too concerned about this. But I would like to see prices rally up high from here. Most of these breakouts, you will get a nice rally up higher. And we may have gotten trapped here. This is not a good sign here. Strong bearish bar. Looks like we may have our loser here. This is a slightly aggressive trade, but I still like it. Second entry long, failed break lower, treat it as a trading range. The bar is probably too doji like, but I still like this trade. We were one tick away from getting stopped out here. Come on. Keep pushing higher. This is why I don't tighten the stops. I don't monkey with them. I just leave it where it is. Alright, so the next bar ended bullish, which is a good sign. Here we may have a potential trap, because look how nice this bearish bar looks all the way down at this support. And I guarantee you a lot of weak shorts, they ended right here thinking, take a look at this big bearish leg working lower. I'm gonna sell with all these people right here. I'm gonna sell at the very low of the move. This is what they're probably thinking, because they're looking at this and this looks very strong. So they're selling at the very bottom. And prices ticked few ticks lower and instantly reverse, big bullish bar. We may get some momentum right here. We may have trapped these people, because you don't trade trading ranges using a common sense. This right here is a common sense, because you observe the market and you wait for market to prove what is happening, what it's doing, and you follow what the market is doing. But not like here. You have to throw common sense out of the window, because you buy the lows and you sell the highs in trading ranges. It is very unlike against common sense, and it is very scary, but you have to force yourself to do this. We almost got stopped out here. I almost I was already thinking we may have a one-to-one trade, so we may be break even, but luckily the stop loss held and we are getting few ticks. Come on, keep working. We may get filled here. Two more ticks, three more ticks here. So the trade was stalling a bit, but it looks like we may have a good strong bullish bar. We are now pushing and we are holding on the prices are holding on support is holding the prices, excuse me. It's been a pretty long day. It's almost 6 o'clock and prices are on the support. We pushed higher. We still are finding a little bit of rejection of this EMA, but you know, this failed break lower is such a strong setup. It's taking a lot more time than it did right here and right here, but I think eventually we may hit this. We may hit our target profit. But yeah, we're one tick away from getting filled. Come on. Prices are failing to break above these highs. It is because of the EMA, but let's keep pushing. A few more ticks. And we got filled. Perfect. So I'm going to be holding the runner. Hopefully we may catch the low of the day now, but anything can happen. So we'll see. So I stepped away for a bit and the runner got stopped out here, no surprise. We just can't seem to catch a runner. But the prices are slow, so once again, no really surprise. So I'm gonna wrap it up. Hopefully you guys enjoyed the video. Hopefully guys, you find it helpful. Just a reminder, you don't have to make it complicated. Look at the structure. It is telling you all you need to know. Downtrend right here, break new low. A lot of people starting to buy here, strong support. And you fade the breakouts. You wait for high probability setup at the key entry point. This was a good second entry short right here. We have a first entry short and a second entry short right here. But we already have a new low. So I think it's too aggressive to go short after all the move happened. But it would have worked. Just to show you guys that these two-legged pullbacks at the right places are such a high probability that you just have to be patient and just wait for them. Trust the process. So yeah, if you enjoyed the video, like the video. I would really appreciate it. Subscribe to the channel if you haven't and you like studying about day trading. And I'm going to see you guys in the next one. Take care, everybody.